Hey, what's up, guys? I got a trader on Instagram who's break even. He asked me a question, and he's just trying to figure out the best way to progress. Like, if a trader was in his position, how do you go from break even to consistently profitable? So, the big thing is just understanding your wins and your losses, right? You want to reverse engineer those wins to see where in your edge, like, or what part of your system is getting you into these trades where they actually run to target. Is it market timing? Is it market volume? Are you trading after news catalysts where there's a reason for there to be one-sided volume in your favor? And then on the flip side of those losses, are you in a position where you're caught in a range? Maybe your edge doesn't work well in a range. How do you determine ahead of time that you have a range? Maybe it's order flow, volume size, right? There's consistent order flow on NASDAQ of over averaging 50 contracts, 100 contracts plus, and then sometimes it's sub 10. And when you have low volume, there's a good chance that you're probably going to range because it doesn't take much to get price to go higher or to get lower, and you are essentially caught in a balanced equilibrium. So a lot of our winning trades are because we are on the side of good quality volume, and a lot of our losing trades are because there's poor quality volume. So what you want to do is you want to figure out the difference between your wins and your losses, reverse engineer the wins to try to figure out what the key catalysts are that get price to go to target, and then for your losses, try to understand what the determining factors are for those losses. Just it's possible that the market timing isn't very good, right? So generally market open has the best quality volume. Sometimes it's a little choppy, but it does clear up. And then as you go later in the day, the volume can really drop off and the quality can drop off. It's also possible that you might have a move earlier in your session that really prints relative to your strategy, goes to target, and then the volume will exhaust after that. A lot of what we do at the advisory is that we get into specific moves in the day, and when they hit targets, this is generally where volume exhausts and price becomes what we call no man's land. And this is where there's equilibrium between buyers and sellers, or the volume quality drops significantly. So to go from a break-even trader to a winning trader, you really need to understand where your edge really thrives and where your losses come from, and do your very best to start reducing the frequency of these poor quality trades around poor volume and see what the difference is in your equity at the end of all that.